Yes, good morning, everyone. Welcome to our Tax Savings Tuesday. And a few days from now, we will have our tax deadline. I need to mute this one. Okay, there you go. So, again, I'm Christopher. I'm the Chief Marketing Officer of Wyco Tax. We are a manpower solution for accountants and financial planners. Today, we have so much topics to talk about. But before anything else, I have to share my screen. Um, these are very interesting topic. Okay, share. How's everybody doing? I would like to acknowledge all our audience. Right now, we are live on Facebook, YouTube. We are also live on LinkedIn. Okay, there you go. So let me share my screen so we can get started. How's everybody doing? Are you guys ready for spring break? And also, are you enjoying the daylight savings time? Okay. All right. So this one, we're talking about the common business and tax planning mistakes and how to avoid them. I'm just having some feedback. So, because there's so many, we've been in the industry for 11 years, me, myself. Again, I'm the chief marketing officer of the company. We learn a lot that there are common mistakes a business owner makes. But if you want to connect with me, I have my LinkedIn, Chris Waikoko. Follow us on YouTube. We also have a Facebook group. And then if you would like to download free check, go to our website. This live chat is only for 30 minutes, less than 30 minutes. The Q&A session is encouraged. Participants are encouraged to type the question, and also we'll read the question in any of our Facebook posts. Be part of our gift card raffle by subscribing on YouTube channel Chris Waikoko. This presentation is meant for the following small business owners. If you're self-employed and work from home, receiving 1099s, have an S corporation, LLC, or partnerships with or without employees, e-commerce, non-accountants, and also non high-income professionals, $90,000 and above per year income, you are our target audience. Just a disclaimer that this presentation has been prepared for informational purposes only. It's not intended to provide any legal advice or accounting advice. Examples and other materials in this webinar are only for illustrative purpose and should not be relied upon technical answers. Wyco Tax is a virtual outsourced tax and bookkeeping company, and we are not associated to any institutions on this presentation, and it's a private business providing resources for small businesses. So let's discuss about the case of Gloria. So Gloria is running her sushi restaurant for 30 years. What are the 7 things that she needs to avoid on running her business? And then as we go along, have you encountered some of these mistakes? Just type yes or type no on our chat section. Number 7, the lack of planning. Failing to engage in proactive tax planning without careful planning, businesses may miss out on the variable deductions, credits, or opportunities to optimize their tax liabilities. There are so many people that we've encountered, family of generations of family business that they inherit from their grandparents and then they pass it on. So these grandparents did not believe in professionals because they run their business. They never had a problem. So what happened to the new owners, the grandkids, they don't consult with the tax professionals. They keep estimating all their expenses, and then they don't have a backup. They only have a shoebox for their records. They don't have profit and loss. They don't have balance sheet. All of what they're doing are estimates. So that is now what they did is they tried to apply. It's a restaurant also. They tried to apply for a business loan, and when happened, they keep declaring negative losses even they're making millions of dollars. They don't report cash income. They're asking for 800,000, and that's why they were not approved for the loan. Because of that, they don't have enough assets, although they have tons of money on the bank. Number 6, inadequate record keeping. A lot of companies, again, where we are looping it on number 7, aside from poor planning, is inadequate record keeping. You can only do a good tax planning if you have an accurate record keeping. Now, record keeping is month-to-month recording of your profit and loss expenses, and also trying to stay away from mixing your business and personal expenses are a no-no. That's why it makes it incomplete, inaccurate, can lead to missed deductions, and may result in penalties during audits. Always remember, when you open a business, make sure that you have a different business bank account rather than mixing it to your personal. Number five, you are ignoring the changes in tax laws, failing to stay up to date on changes in tax laws. The most common one is there's no more personal deduction. When you work with the W-2, there's no more itemized deduction because this is already changed during 2018 on the Tax and Jobs Act. So a lot of people are still putting deductions on Schedule A or the personal deduction, but it's no longer allowed unless you are a veteran or serving in the military. Those moving expense, there are some limitations on doing that. And business may miss out on new opportunities or inadvertently engage in practices that are no longer beneficial. Number four, incorrect business structure. Okay, here is another problem. A lot of people thought, many businesses, that they can pay themselves on W-2. I dealt with this client. He is an LLC and he keeps paying himself on payroll under W-2. When we say payroll, these are people contributing Social Security, Medicare taxes by weekly payroll, and then at the end of the year, they're receiving W-2. And the problem, he keeps putting himself without checking that he should be an S corporation, not just an LLC. So when he got audited, he paid himself $100,000 a year. Since he's not in the right structure, all those 100,000 become taxable as an income of the company. So that's what makes the situation worse. That's why you have to know, even though you're doing your research, it's best to consult a company like us in able to know how you will settle or set up your structure. Number three, misclassifying, okay, employees and contractors. This is very common. Being part-time or full-time employee doesn't mean they are contractor. Being a part-time doesn't mean they are contractors. So that's why you have to follow the three T's. Anything that you control on the following T's, write this down: tools, time, and training. If you're controlling the tools, if you're controlling the time and the training of one of the employees, part-time or full-time, then they might fall as employee rather than contractor. There's a big case of a restaurant owner that we met. She treat her employee as contractor, and this lady, the employee doesn't have a problem about receiving cash because she's getting more rather than putting on a pay stub. But then she got married, but her husband used to get a refund using W-2, and the husband got so upset because instead of him getting refund of his tax contribution, he got has to pay the IRS. And then he noticed that his wife has been receiving 1099s, which that's why upset his refund, because to pay off the 1099 taxes of his wife. Now, what he did, he complained to the Department of Labor. He sent employee determination with the IRS. Then this a lot of agencies step in the business, and then they're telling if they are really, if the way that they're paying the contractor is really right. Then unfortunately the business was in trouble because they misclassified the employee. So what happened, they get penalized. Tons of institutions kicked in and came into play. It's not the employee that complained, it's the partner, husband or wife of the employee. That's why you have to be careful for misclassifying employees and contractors. When it's an employee, make sure you have W-4 if it's contract. W-4 for employees, W-9 for contractors. So before any agreement. After the end of the year, you issue 1099 to your contractor and W-2 to your employees. Neglecting tax credits and incentives. The one that's very popular right now is the self-employment tax credits. You can claim up to 32,000 if you get affected by COVID during 2020, 2021. This is going to end by April. You have to check if you qualify. We have an online tool on our YouTube whether you can qualify or not. or even on our Facebook page. The other incentives and credits are research and development, solar panel, electric car credit. So those are the things that you need to check whether you are qualified. And if you have those, feel free to check with your tax professional or your accountant. Then lastly, number one, and we're talking about the late filing, late or incomplete filing. Remember, filing late has more penalty, 25% higher late penalty or penalties and interest compared than not paying. So there are two types of penalties, not paying on time and not filing on time. So that's why if you're not sure yet that you have everything correct, you need to apply for an extension because especially talking about that for S corporation and partnership, the deadline for this company will be on March 15. Okay, the April 15 or more the C corp and personal return. If you have not filed that, file an extension. It will give you 6 months, but it doesn't give you an extension to pay your tax liability. You still have to pay your tax liability. The extension only allows you to file the return. Remember, there are two types of penalties, not filing and not paying on time. You still have to pay your liability before April 15. All right, about the company, who we are. Our company is YCO Tax. This is an all-year-round, all-in-one accounting and wealth planning service solution. We provide the following areas of services from accounting to tax planning, loan processing. We outsource our medical billing. You can connect with us on we are certified QuickBooks users and we are affiliated with Legal Shield. And we also process IT. That's why our company is also an IRS certified acceptance agent. So the company YCO Tax, we are proactively planning to reduce or eliminate taxes while complying with federal, state, and local. So for businesses or for people that doesn't have employee, we and high income, you don't have employees. We what we do is we reclassify. We try to diversify your money from tax now to tax deferred or tax free through the following product. We have certified financial planners and certified fiduciaries on our team. That's why which bucket do you prepare? Which percentage of your assets in allocated to each category? We do that. That is our financial planning services. But for companies, we create a pizza pie, small businesses, a 10,000 tax savings pizza pie chart. We have 6 slices of pizzas that we're going to go over with you from your business entity. Slice 1, slice 2, your record keeping, slice 3, your business expenses, if you're using home office deduction. Slice 4, we also check your credits, business tax credits, and then slice 5, tax shelter plans. We also have that in our company. And then lastly, we file your taxes. So that's why we can create a 10,000 tax savings. It's a pie chart for your 2024. Why do you have to outsource? The benefits of cloud-based accounting, you have a peace of mind, save headache, save time, save money, and then most of all, faster access to grants and loans. That's why our client got approved for a line of credit, 100,000, because we have the past 3 years doing their books and taxes. Then why entrust your business to our company? Wyco Tax stands by its name, worry-free, year-round, competitive, and on-time accounting and financial planning service solution. We also have a bundle. This is a one-time offer. We're giving $523 off in all if you bundle your bookkeeping and tax with us. This includes you have an email, unlimited text and email support all year. We also reviewed the letter for you for free, and then you have coverage of 3-year audit assistance. Then we provide a copy of your transcript and a virtual accountant. All right. And then also we are going to have a 30-minute quarterly 10,000 tax savings plan for your 2024. Okay. So that would be all. Thank you so much. This would be our next topic. It's every second and fourth Tuesday. This is going to be on March 26th at 12 p.m. Central Time. I have my co-presenter, Certified Financial Fiduciary, MBA. She's no other than Miss K Carion, all the way from California. So that's why, what are you waiting for? Book us today if you think you're not sure or if you think you need a lot of cleanup to your books and to your tax filing. We are here to help. So there you go. Thank you for watching. Again, I'm Chris Waikoko, the Chief Marketing Officer of Waiko Tax. Again, we have a replay on this presentation. Just follow us on YouTube at Chris Waikoko because just like you, your tax needs a break. Have a good